And good morning, good evening, good afternoon, students and traders all around the world and analysts. This is Mike, the FX boss, talking, and this is the professional Forex trading course. Happy Monday, everybody, 13th of May, right? Never forget, trading is a learnable skill, and today we are going to continue to work on the market wave. So, not to repeat myself every single time, we are working on number 1 and 2 and 3, right? Today we're going to chart. Think about how would you build some rules, maybe, and number 3, try to understand how this market works, alright? Risk disclaimer, this stream is not trading or investment advice. You are here to learn. Okay, and remember, if you've been doing this for 3 years, 4 years, 5 years, trying to be consistently profitable, pat yourself on the back, it's not your fault. But it's common sense, right? If your way is not working, why don't you try mine? Fair enough. And for questions and homeworks, you have the Gmail and Skype for extra webinars, seminars, We are just in the mini course called Learn to Understand the Risk and Get Rid of the Fear of Losing Money and FOMO, okay? And lastly, if you didn't receive the free manual, ask for it, send me an email. It doesn't cost you a cent, alright? So the homework was, until Monday, chart the market wave on EuroCAD monthly, weekly, daily chart, okay? So, one more time, just quickly, a market wave, or also called market structure trends, are the short-term trends waving. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, alright? And then it's going to turn, so let's put green for the uptrend, okay? And every market wave, so it's a trading slash charting concept. Every market wave starts with an extension. Alright? What does this mean? This means that the first leg, if you want it, no, this is not Elliott wave, this has nothing to do with Elliott waves. Alright, might look similar, but I'm telling you, this is not Elliott wave, forget about it. As a matter of fact, I never learned Elliott wave, so okay, I cannot help you there. But every market wave starts with an extension. So in an up market wave, it's going to start an uptrend, higher highs, higher lows, higher highs, higher lows. Then in some point in time, near a pivot point, resistance that we're going to learn, then it's going to change direction, the shortened trend, start making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And again, in some point in time, we didn't learn yet, it's going to take some time, but let's say that this is, just graphically the representation of past support, which we didn't learn yet, again, okay? But in some point in time, again, the market is going to start to change direction, it's going to make a higher high, alright? This is the signal, alright? How much is this a signal of an uptrend? We've learned this in lesson number 2, how to confirm trends. $50, right? So the correct answer, this is a 50% confirm uptrend. So you don't enter in here trading the uptrend if you want. How much? Then the market is going to make a higher low. How much is this a confirmed of the uptrend? 75. We learned this in lesson 2. If you didn't learn, go back to lesson 2. Alright? And please do this right now, because in about 6 months time, we are going to be on lesson 128 example, but it's really there, the number, you know, because it's 4 videos per week, 4 sessions per week, 4 lessons per week, you know, and it's going to pile up. 4 times 4, 16 per month. Alright, so learn this well right now. So this is a 75% uptrend. Now on the next one, higher high, now you have a confirmed uptrend. Alright, now on the next retracement on the uptrend, the green one, you know, and on the next, we didn't learn yet, counter trend line break. Alright, so still please focus on the market wave. This would be then the entry. This would be the entry on the short-term trend, okay? Now, if you would trade the market wave, you would have the same entry, but the pattern is different in length or height, you know. This is why the trading charting concept, every market wave starts with an extension. So you cannot have, everybody, you cannot have an extension like this and then you say, oh, the retracement, it's like this. Make sense? Why not? Because extensions are bigger. And this is my bad as a coach, as a teacher, you know, it's a rule. Extensions must be bigger and or longer compared to retracements. Alright, it's a rule. Oh yes, but there is no yes but. Happy Monday, there is no yes but, I don't want to hear yes but. If you do like this, okay, so no, this is not wrong. This is not wrong. With this, just if the rule says extensions must be bigger and or longer compared to retracements, and you start an up market wave with the extension, but then the retracement goes down like this, what does this mean? It's early morning, I know, for some of you. It's late night for some of you. You know, you might be tired, you just came back from work. Alright? Different people live in different countries, different time zones. Anyway, what does this mean? Well, you just charted a down market wave. Would this make sense in any way? You know, how do you know? Because the extension is bigger and longer by default, by the rule, so it's going down. Alright, so now it's the missing part, it's figure out, alright, where is this part of the down market wave? I mean, let's not complicate too much, alright? So we are still learning about the market wave, and if I enter here trading, you're still an analyst, you're not a trader yet, alright? If you are going to listen to me, you know, I'm here to help you and I like you, believe me. I'm looking for traders too, you know, in about 1 year, 1 year and a half. I'm partnering up with some institutions that are looking for traders. And no, it's not a joke, you know, you can call me out, you can call me on Skype or send me an email, we can talk, alright? I can show you, guide you. I can show you with who am I partnering up, you know, and there are real institutions, you know, legalized and regularized and licensed, you know, and all the other stuff. They're looking for traders, really. Okay? So the lesson here is, if I'm choosing, we talked about this in the previous lesson, lesson number 4, if I'm choosing to trade the uptrend, the small one, the green one, then stop loss goes. Very good. Stop loss goes on the pattern traded. So stop loss goes down in here on the uptrend. If you choose to trade the market wave, which would be the violet, then the stop loss goes down to here. Agreed? No, I don't agree. Well, we've learned this in the previous lesson, the logic behind, and this is the skill. Alright? I know I'm boring sometimes, I keep repeating myself. This is the big one, learn this one. Learn the skill of understanding that stop loss goes on the pattern traded, and the logic is if I'm trading the violet one. Okay, now let's go step by step. Two different traders are going to buy at exactly the same place. Same setup. Don't worry about vocabulary, don't worry about, oh, what is a counter trend line, you know, we didn't learn this yet, but two different traders are going to buy the same setup. They're going to buy in here. One is going to put the stop loss down in here. The other one is going to put the stop loss down in here. Alright? So if you might disagree that, oh, if I'm trading the violet one, and you're saying, no, I prefer the short stop, you know, and or I cannot risk that much, which is a myth you're going to learn, okay? You are going to learn that you can risk 1% or monetary, just an example, $300 in 50 pips, and you can risk the same 1% or $300 in 1,000 pips. Alright? You are going to learn this in this very course. Just give it time, you know, we have a huge amount of things to talk, an enormous amount of, you know, lessons and understanding and everything. So please try to understand that, oh, I want a short stop doesn't work. Okay, not for beginners anyway. You know, I want a short stop work for scalpers, but this is the conversation about the advanced institutional Forex course next year. Alright? So back to the logic, why the correct place on the violet is down in here is this one. The market is going to reverse, alright, and is going to break this low on the short-term trend, alright, and is going to do something this, and is going to break this low on the short-term trend. Question, did the pattern called the short-term trend change direction? Meaning, did the market break the short-term green uptrend? If the market stops you out down in here, and this is the logical place to have a stop, in the Forex market you are trading patterns. You are going to learn this, that 90% of systems and strategies that you might learn from the various courses you might have done, nothing works for you. True or not true? Huh? True or not true? 90% of the courses that you've done so far, nothing's worked for you. No consistency. You're not consistent. January, February, March, April, May. True or not true? It's true, right? And this lesson today, so step by step, gradually try to understand, you know, the logic behind it, you know. So if the market changes direction, makes lower low in here, this was your entry, but then breaks this stop loss, did the market break the pattern, the short-term uptrend, the green? And of course the obvious answer is yes, so this pattern is not valid anymore. Agreed? Alright. But at the same time, did this price action, changing short-term trends, breaking your uptrend, stopping you out on your uptrend that you chose to enter, or me, you know, did this price action, even if it goes into a deeper retracement, even if it goes into a, come on, trading view, even if it goes in a deeper retracement, did this short-term trend broke the violet market wave? Yes, you did. No, it didn't. Look where the stop loss is. So the market wave from the past, like from before, it's like this. No, it did not. The price action coming down to him, it didn't break the market wave. Yes, it did. No, it didn't. We've learned in the previous lessons about this is the market wave low. We are calling this relevant highs and lows. This is the market wave high. So this is the market with relevant low. For the market to break the pattern, the market wave, alright, also called market structure. Okay, so it's market structure trends, the name, but we're calling market wave to separate the, to have a better, easier understanding. So if this is the market structure low, the market wave low, the price action might come down to here and break this low. Then we would say, alright, so this pattern called the up market wave, up market structure is not valid anymore. Okay? So you have two different patterns to trade. Okay? There is absolutely no right or wrong. You can choose one or the other. Just the understanding of, okay, if I'm entering the market as an analyst, trying to figure out how this market works, okay, I want to make some money. You are far away from making money. As a matter of fact, this is one of the biggest problems the beginner traders have in the beginning. You entering the market, you are doing this because, profit or loss, it should be, if you are willing to listen to me and learn as an institutional trader, right now at your level, profit or loss is should be totally relevant. Why, boss? Why? Because you don't get how this market works. You could have a winner and you could have a loser, but you have no clue why the winner happened or why the loser happened. True or true? If I call you right now and I ask you, John or Jane, explain to me this winner. Or John or Jane, explain to me this loser. You have no idea how happened, why this happened. Beginner traders talk, of course. True or not true? Alright? So open a demo account, it's all beneficial. Try to make some money, some pips, but not for the sake of money and pips, for the sake of understanding. Alright, now I got it why I'm losing less. Oh, now I got it why I lost on the short-term trend. Oh, now I got it. This is the predominant mentality that you should have the first trade when you're learning just how this market works. Okay? If you are coachable and if you are willing to listen to me, alright? So do your experience on the demo account, enter in here with the stop loss in here, enter in here, do those two trades, both of them, as an experiment, and do this hundreds of times. Play around with different time frames maybe, and collect data with the understanding that, alright, me trading the market wave, this is the result, and me trading the short-term trend, this is the result. Those are all eye-openers experience for beginner traders, intermediate traders too. You are not a trader yet, we're still talking about analysts. Alright? So, uptrend, you have two traders. One is going to put the stop loss down in here on the short-term uptrend. This is the correct place. Somebody else might choose, alright, I'm going to go with the market wave. Okay, every market wave starts with an extension. An extension must be bigger and or longer compared to retracement. Okay. Now moving forward, before you go on the chart, higher high, higher low, higher high, higher low, higher high, higher low. Alright, we've learned this in the previous lesson, we are just doing a quick recap. So higher low, when the market makes a higher high compared to this high, all right? So this was already the relevant high. Only and only when the market makes a higher high compared to the previous high, only and only then this low becomes confirmed. Talking about the market wave. Alright? Why is this extremely important? The understanding on when in this example it's an up market wave. Why this is so important to understand that, oh, this low became confirmed? Because on the next entry on the market wave pattern, the next entry on the market wave pattern, the stop loss is not going to be down here anymore. You guessed it right, the stop loss is going to be up in here, because this is the relevant low. And if the market reverses and stops me out for any reason, by the way, and stops me out in here, this is the level, this is the low that is going to reverse the market wave. Okay? I know it's a lot of information. Please download the video from YouTube, download the recording, rewatch it a few times. Okay, this is crucial for you to understand. This is the foundation. Okay, and I know I'm boring sometimes and keep repeating, learn this well, because if not, it's going to get more and more and more complex, and you are going to make mistakes. Setting the stop loss in the wrong place, charting the market wave in the wrong way, and those errors, I'm not going to say not acceptable anymore, but are going to make you problems. You're going to have more losers, you're going to scratch in the head, am I doing this in the right way? Okay? Anyway, send me questions if you have to. Alright, so that's being cleared. Now let's go to EuroCAD, which was the homework. And EuroCAD monthly chart. So the monthly chart, it's no brainer, right? And we clarified in the previous lessons that on the monthly chart you are not going to be able to see uptrends, downtrends. Sometimes yes, sometimes not, alright? So we're at the lower band of EuroCAD. This is the starting point. Okay, if you don't agree, send me an email, connect with me on Skype, whatever. So the first, we said that rules, extension must be bigger and longer compared to retracements. And we have that riding charting concept. Every market wave starts with an extension, alright? So give me a second. So from here to here, this would be the extension leg. From here to here, this would be the retracement leg. And yes, everybody, I have two dogs called Ichi and Fibo, and they are always fighting, And where they're getting crazy, something's happening with Bitcoin, they are Bitcoin guys, those two dogs. Nonetheless, I'm joking. So extension, retracement, and let's do it in a different way. Let's use the trend line. Okay. So extension is going to be green. Then on the monthly, this was the homework, retracement. Alright, we are charting the market wave right now. We want to figure out what is the market trying to do. The market made a higher high, the new extension. Let's color code in a different way. Then we had a retracement. Can you see? Higher high, higher low. So let's color code this in a yellow. Hopefully you can see it. And then we go to the next, it doesn't look like, but it's the next extension. The market made a higher high, and then we had the next Was this a high? No, it was not. Okay, so this was low, right? Okay, everybody, so this was the up market wave on EuroCAD monthly chart. So relevant low, and I'm going to get out of the magnets. Relevant low, relevant, come on, trading view, relevant high, relevant low, relevant high, relevant low, relevant high, come on, relevant high, and then as you can see down in here the market broke the relevant low, didn't it? Did the market break the relevant low on the up market wave on EuroCAD monthly chart? Yes, it did, right? So in charting, when this happens, then we need to reverse the market wave, and remember, extension must be bigger. So if this is the relevant high, you know, so we just move forward. Now if this bothers you, you can delete, alright? You can delete. If this bothers you, okay, you can delete it, it's not a problem. And so you just have the relevant high, and you go what? From an up extension, up market wave, you go to down extension, right? And then you go retracement, lower high, agreed, lower high, and then we go to the next down extension. Okay, nothing that difficult, I mean, no brainer, you know. Alright, now I don't want to get too complex right now talking about trading, and charting is easy, right? So far it should be, at least on the monthly, charting is easy, but talking about you as an analyst, you know, when you see something like this, I'm going to give you the answer. It's too soon for me asking you questions, but you being an analyst, you know, and down in here we didn't learn candlestick formations yet, but here would be the place to buy, not to sell. Okay? Why? Because another trading concept, not charting anymore, trading concept, the monthly bands are the strongest force in forex trading. And of course we are talking about direction. Alright? You might know it, you might not know it. There is a 99% chance that you didn't have this knowledge before. You didn't know about the existence, about the monthly bands. It's alright. But starting from today, when the market comes down in here, you know, you tell your trader, buy, go long. And beginner traders would not agree because we were in a downtrend. Monthly bands are the strongest force. You might write this down. Boss, can you repeat please? The monthly bands, talking about directions, the monthly bands, when you're comparing, alright, you know, monthly band, market structure called market wave, short-term trends, I have a down market wave, I have a down short-term trend, I have a down market structure, but me, this strange guy that you are looking at right now and hearing, is telling buy the market. Buy the market, go long, don't go short anymore. Why? Because the monthly bands are the strongest force in forex trading, talking about direction. Alright? And of course, most of my students didn't listen, they were shorting the market and bam! You know what happened? the market went up. Okay, you're going to learn with time. It's good news. Most of the things that you are learning are totally and fully predictable to a degree, of course. We never say, oh, it's guaranteed. There are no guarantees. But this would be a sample, an example that, you know, this market going up, it was fully predictable. Probability wise, 90% chance of the market going up. 10% chance where it didn't hit the monthly band yet, but bullish candlestick formation, we didn't learn yet, you know, and trend line break if you want, if you're an advanced trader or intermediate, you know. I mean, this was easy, predictable to make pips and money, advanced traders. Okay, and for the analysts to understand, oh, this market, you know, it's going down, you know, I'm an analyst trying to figure out the market. It broke the up market wave, it's going down, but down in here, well, I'm going to look to go up as an analyst, as a direction. I'm going to tell my trader, oh, we prepare to buy, let's prepare ourselves to buy, and buy the market. You would be a winner as an analyst. I mean, congratulations to you. Okay, so if you're coachable, if you're listening to me, if you're willing to listen to me, and willing to maybe unlearn some stuff that you've learned in the wrong way, and you can test this knowledge, go on different currency pairs on the monthly band and look what is happening. Alright? The monthly bands are the strongest force. We're talking about forex trading, alright? Nonetheless, our market wave is still down, okay, and the market now it's in here, you know, trying to guess out, alright, what is going to be? Are we going to go for the next retracement? Are we going to go up for an extension? Whatever might be the case, okay, but the market long term is going to go very good, up. The long term view, this is lesson number 1, long term view, the market hit the lower band, the market, EuroCAD, long term, it must come to up to here. In between it can do anything it wants, wishy-washy, you know, doing the chaotic patterns, consolidations, whatever, but nonetheless the long-term view is up. Alright? There is a question in your mind, maybe, boss, if the market wave is down, and it is, why should I trade up? Great question. Answer: because of the monthly bands. Okay? The monthly bands are the strongest force. Alright? So I'm telling you, 9 times out of 10, 8 times, I'm that arrogant, I am bragging, I'm that arrogant to tell you, you know, 8 times out of 10 the market is not going to hit and touch the lower band. Listen to me, there are no guarantees, it's a probability game. 8 times now, this is what is statistically proven if you study the charts. The market can go into a deeper retracement, but 8 times out of 10, you know, it's not going to come down to here and retest this low. Okay? This was lesson number 1, imports and export and, you know, international trade and everything. Alright? So this was the... And Fibonacci are fighting. We're going to check Bitcoin, what is happening when we're done with this one. So this was easy, right? Okay, now this was the monthly chart. Now let's go on the weekly chart, and we're going to do, I'm going to remove the drawings, you know, and what I'm going to do is I'm going to left click and I'm going to right click and I'm going to something like this. So this was the lower band, and we are on the weekly chart this time. It's going to be similar, with the difference that you can see the short-term trends. Okay, so this is the starting point. Can you see the short-term trends? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Short-term uptrend. And then can you see lower lows, lower highs, lower lows, lower highs, false breakout, higher high, but nonetheless the market came down, and this is the retracement. Can you see it? And then the market stopped making lower lows, lower highs, and start making higher highs, higher lows, higher highs, higher lows, up until up in here. And then the market stopped making higher highs, higher lows, reverse, start making lower lows, lower highs, false breakout, you know, and came down to here. And for one last push, this was the last one, start making again higher highs, higher lows, higher highs, higher lows. Okay, so on the weekly, you know, this is the up market wave: extension, retracement, extension, retracement, extension. It's overlapping with the monthly. Alright, this was the homework. And then similarly, you know, you would see from the weekly that, alright, if this is the relevant low of the market wave, so the market price action, you know, broke the relevant low. Okay, now again, if the past bothers you, especially for you to, you know, oh, it's messing with my head, I don't really understand what is happening, you know, remember, we need to reverse the market wave. So this is the relevant high, and we are going to zoom in, and we're going to start connecting. You know, this time I'm going to leave it on the chart. It's up to you. You can delete it or not. But anyways, you know, lower low, lower high, lower low, lower high, lower low. You know, false breakout on the upside because it made a higher high, but still lower low, lower high, lower low, lower high, lower low, lower high, lower low. And remember, we've learned in lesson number 2 that this is not a relevant high. Agreed? Because it continues the downtrend. In other words, this was the starting point of the downtrend, you know, and this is the end of the downtrend. Agreed? We started here and we finished here. I mean, it's common sense, right? But also, what does this prove? That many times, if I'm trading the short-term trend, nothing wrong, I'm trading the short-term downtrend, I would enter in here, I don't see the future, you know, I even, so back in time the market was like this, we couldn't know that the market is going to reverse the up market wave, but anyways, I was trading the retracement, and of course the stop loss goes on the pattern traded, the stop loss goes up in here. This is the relevant high of the downtrend, and I was shorting the market, trying to make some pips and money, and here is the market stopping me out on my downtrend. Okay, so I would be stopped out on the downtrend, but going down I would not be stopped out on the market wave high. Agreed? One more time, just for you to see the difference, you know, why, there is no right or wrong, but if I'm choosing as an analyst, you know, beginner traders, we have the issue of, oh, I want to make money faster, you know, therefore I'm going to trade the short-term trends because they're quicker, faster, so I'm going to make more money. And this, unfortunately, it's a myth, it's not true. You're going to see that compared to the market wave, the short-term trend, if you are going to dedicate yourself and study the charts, you're going to come out with numbers that trading the short-term trend, it's not wrong, but compared to the market wave, you are going to be stopped out more times. Alright? Not right or wrong, not better or worse, just two different patterns giving you different opportunities to enter and being stopped out less times maybe. Okay, so anyways, you know, I'm charting the downtrend and now I must chart the uptrend. Of course, this was the high, so there is not much to do for me like to connect this to this. Remember what we're doing right now, it's still the homework. I'm charting the market wave. Okay, and then now I can see this is going to be green, and now I can see the market again, you know, lower lows, lower highs, lower lows, lower highs. Alright, until down to here. This was the homework. And so down market wave, relevant high, relevant low, relevant high. Boss, can you explain again why the down market wave? Yes, because before the market wave was up, the violet one was up, relevant low, relevant high, relevant higher low. On the market wave, the violet one, relevant higher high. So the market was making higher highs, higher lows on the market wave on the violet. But then, as you can see, the market broke the up market wave in here. In here. The price action went down, 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 down and made a lower low. Okay, so this up market wave is not valid anymore. This is the reason. So then you should have charted a down market wave, starting with the down extension, retracement, and another down extension. And we've learned in lesson 4 that the market wave lows and highs, the relevant lows and highs, are the borderline separation lines between uptrends and downtrends. And hopefully you can see it today, you know, on the chart. You know, the relevant highs and lows are the separation lines between downtrends. This is not the best example because, but you know, on the in the previous up market wave, we can clearly see uptrend, relevant high downtrend, relevant low uptrend. So relevant highs and lows on the market wave, those are also what you're going to hear in the future, you know, or you're hearing maybe on Bloomberg or whatever you're watching, you know, about somebody's going to talk about key levels, you know, oh, we are looking at this key level, you know. Generally those are the market wave highs and lows, the market structure highs and lows, the market structure trends highs and lows. Okay, now what do we have here? So the market went higher high, higher low, higher high, agreed, higher high, higher low, higher high, and then the market made low to high, high to low, low to high, high to low. And because this is a downtrend, okay, and those are the rules. You know, this is now, it's not confirmed yet, but this is now the relevant high on the down market wave. So extension, retracement, extension, retracement. You don't have this on the week, on the monthly, because you have no short-term trends. But if we obey the rules in charting, if we obey the rules as good analysts, then when the short-term trend changes, I must address then that this is the market wave high. Agreed? Alright. What is the long-term view on this? So here is the question for you analysts. Are you expecting next year the market to be up in here with the new up market wave, or do you expect next year the market to be down in here with the next down market wave low? And this makes all the difference in charting and trading as an analyst with the purpose of the skill, with the understanding on how this market works. One answer is the correct answer. Something is going to happen 7 times out of 10, 8 times out of 10. I'm telling you, it's predictable. You can call me out anywhere, anyway. Just call me out. Oh, what you teach is not true and it doesn't work. Call me out. I'm that arrogant, right? I'm not arrogant, really. I just know what I'm talking about, being 20 years plus in the markets and being an ex-institutional trader too, you know. But again, some people are not coachable, you know, and maybe they've learned different philosophies and different methodologies, you know. But when you ask your previous coach or mentor or whoever, you know, oh sure. And again, you know, I don't want to be rude and badmouth anybody. This is not the purpose, but you know, I have a lot of people coming to me, and I'm new on YouTube, but I'm not new in the industry. There are a lot of advanced traders, people who are 5 years in the making, 6 years in the making, 7 years in the making, 3 years in the making, and they are not consistently profitable just because they've learned in the wrong way. Please don't get me now, oh, I'm not arrogant. I'm trying to explain to you that a lot of traders coming to me crying, you know, oh, can you help me? Sure. But they need to unlearn some concepts and rules that they've learned from other people. Make sense? This is not the only way, we understand this, but those rules and concepts this is basic stuff on how this market works. Okay? And before we finish, the difficult one, you know, the most challenging one, because it has more highs and lows, you know, is the daily, of course. And do we have the monthly bands? No, we don't have it. So one more time, do we have monthly bands? Did I erase them? No big deal, I'm going to put again, so just to have the starting point, right? So sync in layout, there you go. To have the starting point from the daily. Alright. So the homework, right? The homework was, what was the purpose of the homework? Trading, charting concept again. Just to remember, trading / charting concept. Every single time frame has its own market wave called market structure trends, and short-term trends. Okay? Trading charting concept, every single time frame has its own market wave, market structure trends, and short-term trends. What does this mean? Lesson number 5. If I go on the daily, or if I go on the monthly and I right click and sync in layout and right click and sync in layout and right click and sync. Come on, left click, right click and sync in layout from the monthly. And now I go on the daily, when I'm telling you that every single time frame has its own market wave and market structure trends. If I do this, this would be the wrong way to go. This would be the wrong thing to do. Alright? If you are willing to listen to me, don't do this. Okay? This is wrong. Analyst, you are charting in the wrong way. Okay, so you should start down in here, but we don't have time. Now, knowing that the market is going to break the up market wave, we're going to start from here, right? Now, let me show you why this would be wrong. Okay, let's say that I have the extension from the monthly, okay, and I'm trading or charting, and I'm telling my traders to do whatever might be the case from the monthly. Now, if I connect, so remember this was the relevant high from the monthly, okay, so if I start connecting on the daily, low to high, high to low, 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 low to high, alright, and this is a downtrend, but then I have low to high, high to low, low to high. Don't I have an uptrend right now? Don't we have an uptrend? Yes, we do. So how does this work now? You're learning concepts and rules, and I've been telling you for the last 2 days, 2 sessions, 2 lessons that the relevant highs and lows on the market structure trends, on the market wave, the relevant high and low are the borderlines between extensions and retracements. Meaning, every single time the shortened trend changes and confirms a new low or a new high, then this becomes the relevant high and low. So, if I continue to chart and have lower low, lower high, lower low, lower high, lower low, lower high, lower low. Didn't the market made a new low? Isn't this low lower compared to this low? Yes, boss, it is, right? And it's also smiling. So the daily down market wave is this one, extension, retracement, extension. Can you see it? So this is the relevant low, this is the relevant low, this is the relevant high, and this is the relevant low. Okay? Make sense? Does this make sense? So me having this, maybe in the future, because your brain understands what is what and is not mixing apples with bananas, but today, right now, this would be the wrong way to go. Because if you have this line and you don't see the future, you know, you would say to your traders, or maybe yourself, you're going to tell just, you know, oh, just short the market. And you're going to short the market, and you would lose when the market went into a retracement on the daily chart. Hear me out one more time. If you would trade on the 50-minute chart, 1-hour chart, 2-hour chart, 4-hour chart, and the daily chart, because you would have charted this monthly, you would have the monthly market wave on the daily chart. This is wrong from the analyst standpoint. You know, if you would short the market down in here, you would lose. Agreed? Not on the market wave, you would lose on the short-term downtrend. Because the market, you know, your brain is seeing this and it's trying to tell you, oh, short, 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 sell, sell, sell. But what happens, you know, you would have 2 weeks or 3 weeks of an uptrend. And on the 1 hour chart, you would not have the stop loss up in here. Agreed? And even if you don't agree with me, do we agree that I have a different market wave? I mean, let's finish, right? Let's finish the first cycle. Okay. Then, so, and then I need to go low to high, high to low, low to high, lower low, lower high, lower low. So it's still a lower low. Okay. Lower high, lower low, until down in here it was on the daily, it was a down market wave. See? But then what happened? The market broke the relevant high on the daily. This high in here might not be relevant from the monthly and the weekly, but it is relevant from the daily. Make sense? So, and especially again, you know, look at the, you have a straight down line on the monthly, you know, you are charting like this, which is the wrong way to go. Look how many different stuff we have in between. Alright? So just swiftly, because I need to go, I'm sorry. You know, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This became then the relevant high of the market wave. And then it was a retracement, lower lows, lower highs, lower lows, lower highs. And this is not an, so pay attention, this is not an uptrend. Alright? And so we need to continue. This is not an uptrend. We need to continue to go to here because we have no uptrend. This is not a higher high compared to this high. It's not an uptrend. So we need to continue. And again, we have no uptrend. So when the market went down and now broke the low of the market wave. So this low broke this low of the up market wave. So, and don't worry, tomorrow we're going to work again on the understanding. So this was the up extension leg, got broken, broke, right? So we are looking for the change in the short-term trend. Okay, so this is not an uptrend, this is not an uptrend, this is not an uptrend. So the uptrend comes in here, lower lows, lower highs, lower lows, lower highs, lower lows. Now it starts higher low, higher high, higher low, higher high, higher low, lower high. Okay. So compared to the monthly and the weekly, again talking about the down market wave, this is the relevant high, and this is the relevant low, and this is the relevant high, and then this became the new relevant low before the market went into the retracement on the bigger scale. Okay, but the market wave on the daily was extension. Whoops. So I need to get rid of this one and this one. There was no uptrends, so it went extension, retracement, extension. Okay, I don't want to get too complicated today and too complex, but can we understand that because you have two market waves on the daily, first the market wave was down, and then we're finished, okay? The market wave was down, then the market broke. It looked like it's going to go up, but then the market broke again, a lower low, and it went down again. So we had 2 times the down market wave. As an analyst, we would trade this price action on the daily in a totally different way compared to the monthly and the weekly. Okay, we would trade completely different, and you as an analyst, if you study the chart, and please do this, you know, you would also tell different stuff to your trader, talking about direction. Make sense? You would not sell your you would not tell your trader just, oh, we are in a down extension and just sell. Not on the daily chart. Not on the daily chart. Look at the retracement in here. If money is made from Monday to Friday in the financial markets, you're telling your trader that just short the market in here from the daily standpoint. Let's be specific. The trader would yell at you, why did you tell me to short? I mean, are you crazy? You know, and all this other stuff. And I've seen this for real, being an institutional trader. Okay, a little bit bigger lesson today, a little bit longer lesson today. Thank you for your time. See you back tomorrow. Please, I beg you. Why I'm begging you? I'm looking for traders. Looking for traders. It's not a joke. Download the videos, rewatch it a few times, study the charts, and come back with questions. Send me questions on the email, send me questions on Skype, right? Alright everybody, thank you for the time, and this is Mike, the big Mike, not, you know, so this is the FX boss. Mike, the FX boss, signing off. See you tomorrow, thank you, bye bye.